Hello and welcome to Decoding Risk, where we give you expert insights on trending topics in the insurance industry. I'm your host, Edward Bromley, one of the marketing content managers here at Fusible, and today we'll be talking about premium leakage and specifically how it affects insurers in the motor carrier industry. Premium leakage is the difference between the premium insurers should collect based on accurate data and risk assessments versus what they actually collect. And joining us today to talk about this is Chad Krueger. Chad, do you mind giving us a bit of background on your experience in the industry?
Yeah, my background is I've got a number of years of experience now, and I actually started out as a safety director handling the insurance programs for a motor carrier when I first got out of college. And from there, I went to the agency side of things where I worked with a number of different motor carriers and construction companies, mainly on the fleet exposure side of things, but covering the DOT and the OSHA side of things. And then I had the opportunity to go work for a super regional insurance carrier where I first came into contact and had my own access to Central Analysis Bureau, one of the feasible companies. And from that standpoint, really used the central analysis tools within the organization and came into contact with the people at CAB and grew a relationship there and been with Central Analysis Bureau since 2018.
Yeah, so
Yes.
it sounds like you have a lot of experience in this area, and I think that will kind of lead to a great discussion today. Thank you for joining us.
Absolutely. I'm excited to get rolling.
So, obviously, if we're speaking to insurers, they probably understand what premium leakage is. But for those who don't, can you talk more about what exactly it entails and how it impacts the motor carrier insurance industry?
Yeah, premium leakage is a loss of revenue for an insurance company when policyholders don't pay the full amount of the premium, or they could make fraudulent claims. It can occur due to a number of reasons. Most organizations, you've got an underwriter who's looking at applications that are provided by the agents and things like that. They're sending loss control or risk engineering folks out to verify those different exposures. And there's lots of different ways where the industry uses data to be able to better understand the exposures of the motor carrier, but we're always working harder and trying to find additional data to be able to reduce those potentials for that premium leakage. And that can be done a number of different ways through understanding values or where that motor carrier is operating, the type of equipment, the number of pieces of equipment that they're operating, and the feasible organization through Central Analysis Bureau and Price Digest help plug a number of those holes.
Does premium leakage affect an insurer's ability to compete in the market?
Yeah, so as far as the insurers are concerned, you want to be as accurate as possible on all the exposures, but obviously specifically on the vehicles and where they're transporting and things like that. If an insurance carrier is providing coverage to a motor carrier and they don't have a clear picture as to the number of vehicles or the values of those vehicles or where those vehicles are traveling, insurers have different rates based on how far motor carriers are traveling or where they're traveling or the products that they're transporting. And being able to have a clear view as to what those different parameters are will help them price more appropriately. And then those data points or that information is used to determine pricing or rates or discounts or credits or whatever it might be in order for that insurer to stay competitive in the marketplace.
So for insurers, it's, what I'm understanding is it's a loss of revenue. So how does it affect motor carriers themselves? Is there some adverse effect to them if they are not being charged the correct premium?
When it comes to vehicle values and things like that, it can really create a friction point in the whole insurance chain between the insured, the motor carrier, the agent, and the insurer. When you're looking at different values and things like that, normally the process is that a motor carrier working with their agent, they'll determine what the vehicle values are. They'll fill out an application, a quote form normally. And if they're not certain what the value of a piece of equipment is, there could be some guessing going on. They could call their dealer and say, hey, what's the value of this piece of equipment? And then they get that and they submit that to the insurer. And a lot of times they're trying to get as economical of insurance as they possibly can. So, they might err on the low end potentially with those values that they're reporting. And especially, through the process of COVID that we recently went through where vehicle values were all over the place. They had gone way up. They're coming down now. But you get into the situation where a motor carrier says, hey, my piece of equipment is worth $50,000. Well, God forbid they have a complete loss. And now we find out that replacement value of that vehicle is actually $70,000, $100,000 or something like that. So now they end up being underinsured. So that can become a problem for that motor carrier because, well, hey, I need this vehicle. I'm going to get 50,000 for my insurance, but I can't buy another one for 100,000. So now you've got a gap there that you need to make up through the business somehow. And that becomes a little bit of an issue too, because when the insurance carrier is working through the process of mitigating that claim, and they're going back to that motor carrier and saying, hey, well, you have this much coverage. And the motor carrier is like, man, I thought I was fully insured. And now they're not going to get full value or what the value is that they thought. So it's got a lot to do with making sure that they've got the appropriate coverages, make sure that they're reporting the values, make sure that they're reporting all of the vehicles, they're updating throughout the policy year. I came from an insurance carrier. Part of my job was reporting to the insurance carrier and my agent new vehicles that we purchased or sold throughout the year. And that's something that is not always necessarily top priority in what's going on within a motor carrier. So it's very important that the industry uses the data that's available out there to be able to understand throughout the policy year what vehicles are being added or removed, what the appropriate values are. Communicating is something is way over or underinsured so that we've got that positive relationship throughout that insurance chain.
So based on what you were saying, you've had experience in working for an insurance carrier, you have experience talking now with insurers. Is this a problem that, they're aware of? And if so, what kind of methods or traditional methods are they using to fight this?
Yeah, it's definitely something that the industry is aware of. Premium leakage is something that's been going on for many, many years. And we have our clients come to us wanting to learn how they can get better at those kind of things. And it's certainly something that we provide a lot of resources to be able to help folks understand those exposures. Premium leakage is one of those things where if you're not charging appropriate premium on the front end, that affects basically what, is that insurance company, what is their loss ratio going to be? And we know that in the motor carrier industry, the truck insurance industry, it's generally pretty high loss ratios. And our goal is to help those insurers be able to recognize the premium that they should be collecting on the front end, charge those appropriate premiums throughout the policy year, and then also mitigate those claims to make sure that you're providing value to that insured when you're paying out those claims.
Are there any particular challenges with things like data verification and accuracy when they're trying to calculate these premiums and figure out these policies?
Yeah, there's a number of different ways that insurers will do that through Central Analysis Bureau. We're helping motor carriers verify what vehicles we've got inspections for, what they're reporting to the government, the number of vehicles that are being reported. We're able to help the client understand if there is, they're telling the government that they've got 30 vehicles, but maybe over the last 24 months, we've got inspections for 45 different power unit VINs. On the Price Digest side, again, they're able to help provide accurate, up-to-date values to ensure that they're charging the appropriate premium and they're avoiding that leakage, ensuring that they're able to provide that viable coverage. So there's a number of different ways to be able to do that, whether that be through, and again, also the Accord application or the trucker supplemental application that those motor carriers are completing with their agent to verify what those exposures are. Again, whether it's vehicles, vehicle counts, types of vehicles. And again, when you're looking at those types of vehicles and the years and different things like that, being able to get that appropriate value, whether it be MSRP or declared value or whatever it might be, those values are very important for appropriately pricing that risk when they're looking at writing that policy for that motor carrier and providing that quote to that motor carrier so that they can, number one, remain as competitive as possible because they're competing against other insurers for that business, but then also making sure that they're pricing appropriately and having their eyes fully wide open as to what those exposures are.
You've just mentioned a number of different technologies that they can make use of. I know, though, that there's a growing trend of telematics technology. How can telematics play a role in addressing premium leakage?
Yeah, great point. So we announced our partnership with Trucker Cloud, one of the industry leaders in aggregated telematics data, and us with the feasible side of things, being the leader on the insurance industry when it comes to vehicle values and motor carrier data. It's an absolutely fantastic partnership. The telematics piece of it can be very, very important because based on whatever third-party provider they're using, whether it be an ELD or a camera system or whatever it might be, they'll have access to 40 plus different, telematic service providers in order to verify a number of different things. One is, what are the vehicles that the data provider is included in that vehicle, right? So now we can match up, what vehicles do they have this TSP in? CAB can provide the information based on what vehicles are being inspected and what they're reporting to the government. The insurance carrier will have the applications. So there's different ways to cross-reference what units is this motor carrier using and what is actually on the road, where are they going, how far are they going, where are they being parked, where are they taking their rest breaks, all kinds of those different things to make those data calculations more accurate for that appropriate pricing. And to say nothing of having that telematics, being able to understand, again, exactly where that piece of equipment is operating. The industry generally depends on IFTA reports and international fuel tax reports to be able to say, hey, we did 3,000 miles in the state of Illinois in 2023 or whichever year they're looking at. Telematics data will be able to not only say, yes, they did 3,000 miles in that particular state, but they can tell them exactly where that was, when it was, the time of the day, which vehicle it was, and to be able to better understand that exposure, because I think we would all agree that if a motor carrier is doing 3,000 miles, but it's just the extreme northeast Chicago loop portion of the state, as opposed to the southern portion of the state, which is oftentimes, smaller towns and farm country and things like that, the exposure is much greater if they're doing more routes through the northeastern part of Illinois, as opposed to fewer routes and longer routes in the southern part of the state. So those are all different areas that insurance carriers will be able to more accurately understand that data and price appropriately. Additionally, parts of that data that we'll be able to pull into the system as well too is going to be harsh events. So hard braking or speeds or things like that, and they can use that data to understand the exposure better within the organization as well too, all the way down to the potential for a first notice of loss. If there is a crash or a harsh event or something like that, data will be able to be pulled into the CAB system through API or however the company would like to ingest that data to be able to be notified about that as quickly as possible.
So it sounds like telematics is not only good for just making sure that you have accurate data when it comes to claims and creating that policy. It obviously helps with accountability for the motor carriers, but there is a lot of data collection from these motor carriers. How will that affect the relationship between insurers and motor carriers?
The world is going the way of data. I mean, we probably all have some sort of social media, and we've kind of all seen that we get ads on things that we talk about. But that's just the way the industry is going. And in order for the motor carrier industry, the truckers out there to remain viable, for the insurance companies out there to remain viable, this data needs to be made available to be able to understand what those exposures are with those motor carriers. Sure, there's going to be some, slow adopters to providing that data to their insurers, some motor carriers that maybe won't be interested in that. But the industry needs to adapt to be able to incentivize those motor carriers to provide that data so that they can have that information, that they can make the best decisions, so that they can have the best cost, the best coverages. And again, ultimately what insurance is for is to be able to help that motor carrier in the event of a major loss to remain viable, to stay in business. And we see those kind of things occurring where some motor carriers are going out of business, and they're citing insurance costs as part of that reason as to why they're not able to remain viable. They can't stay in business. And being able to have that open communication, that exchange of information is going to be very, very key to help the industry remain as viable as possible going forward. Eventually down the road, whether it be, 5 years, 10 years, whatever it might be. It's just going to be another data point that the insurance carrier asks for through the agent that the motor carrier is going to provide in order to be able to understand that motor carrier's exposure and again, write them appropriately, get the appropriate coverages that they need so that company can do their job and get the products delivered to the stores where you and I want to go buy those products.
Absolutely. I think that's incredibly well put. So, first off, thank you for joining us today. I do have one final question, though, just to kind of wrap up our conversation here. Do you just have any final thoughts for insurers on their work in addressing premium leakage?
Yeah, I think, just kind of going back to the data side of things, the telematics piece, again, Central Analysis Bureau and Price Digest, a couple of the fusible brands out there. Certainly, we're very involved with the vast majority of insurers that write commercial auto. And I really do feel as though the telematics side of it is going to be the next step in getting a much better picture on those exposures. And I think as an industry in the insurance world, which we are a prime supporter of, it's going to be to the point where if you're not the insurance carrier asking for the telematics data to be able to be brought in and understood by the underwriters and actuaries and things like that, it's going to be adverse selection, basically. If you're not trying to understand this data and you're not accessing that information, you're going to be a little bit left behind on the insurance side of things. So we're excited about having our partnership with Trucker Cloud. We're excited about our relationship with the insurance carriers and agents and motor carriers out there. And we look forward to using that and leveraging that information to help our clients be the best that they can be.
Fantastic. Chad, thank you so much for joining us today. I think this was a great discussion, and I think you brought some excellent expert insights into this topic.
No problem. Excited. Looking forward to the next time. Thank you very much.